Welcome to Growth Investing Mastery. This video will look at evaluating a new growth stock. As a reminder, this is not investment advice or recommendations to buy any stocks. The purpose of this video is to level up your growth investing ability. We will examine how to improve your process of evaluating new growth stocks. An improved process will drive superior results in the long run. And getting strong results will help build confidence in our edge over the market. As of our latest portfolio review, this channel is up 232% since the start of 2024. The topics for this video will include discussing some assumptions we have for this part of the process, and then we'll look at 9 steps for evaluating a new stock. And we'll use a real-world example with a company called Evolv Technologies that has symbol EVLV. And one of the things we'll look at is printing the transcript with noting key financials and product details on the back of the transcript. We will discuss underlining key aspects in an earnings transcript, and then we'll look at documenting pros, cons, and our conclusions for the stock. We'll then look at how to make your final decision whether to invest or pass on this investment. And we'll show actual photos of how the back of the transcript looks. And this is the first time I've really revealed this part of my process. Let's now look at some assumptions we have for this part of the process with evaluating a new growth stock. And we assume we have a stock ticker that we obtained from our screener or from discussing with other investors. And at this point, we've already vetted the financials for the company to show accelerations. We want to see growth in revenue, EBITDA, net income, and improving gross margins. Revenue is the most important of those 4 metrics, and it's hard to find a stock that's growing all 4 of these metrics sequentially. Our numbers first approach makes sure we don't get suckered in by just a compelling story. It will be a waste of time for us if we investigate the company and really love the story, but the financials are not growing. If we got the stock ticker from someone else or a recommendation service, we want to make sure this is a real growth company with revenues growing a minimum of 30% or preferably above 40% year over year. A lot of times someone may say that a company is a growth company, but when you look it up, revenue is only growing 10% year over year. And they might have a completely different definition of growth where they're thinking maybe this company will grow in the next couple quarters. But we really want to see revenue growth posted already. We need both numbers and narrative to meet our criteria. And we use a very simple acronym, NN, to represent that. Numbers is objective and easier to check first, while narrative is subjective, and it will take longer to understand the story. Starting with numbers first allows us to build a more efficient process. We can rule out companies which don't meet our guidelines for accelerating financials. When you are evaluating numbers for a company, you want to think to yourself, is this a business I would invest in based on the financials alone? Let's take a look at step 1 in our process, which is printing the earnings transcript. We want to print a physical copy of the latest earnings transcript, and the typical transcript is between 10 to 15 pages of paper. Any decent data provider should provide the earnings transcripts. For example, services such as Koifin, FinChat, or Ticker all have the earnings transcripts, and they cost about $30 per month. And what I've found is that printing a physical copy of the transcript ensures we simply do not skim the report. The physical copy acts as a forcing function to review the transcript, and it leaves a sense of accomplishment once we're completed. We will use the back of the transcript as our note-taking area. I like to use colored pens for marking the transcript, and I use a blue pen for my first read-through of the transcript. The blue pen has a little bit of symbology comparing to the ocean or sky and our mindset should be to think of the open possibilities. We don't want to try and categorize the stock too much or put them in a box right away. And something to keep in mind is we can print multiple transcripts at once if we have a number of symbols from our screener or other investors. So sometimes when I look at my screener, I might get 3 or 4 symbols that I want to print the transcripts for. Step 2 of our process is to note key financials on the back of the earnings transcript. And we want to note the last 5 quarters of results in writing on the back of the transcript. The 5 quarters is so we can see the year over year comparison from the latest quarter. The key metrics that I note are revenue, year over year revenue growth rate, EBITDA, net income, and gross margin. So, in the case of Evolv Technologies, the company we're looking at, we note the following on the back of the transcript. We note that revenue went from 22.2 million to 25.5 to 27.4 to 29.1 and to 32 million on the latest quarter. Taking a look at the revenue year over year growth rate, it goes from 19% to 29% to 37% to 41% and to 44%. That's a really impressive trend, which caught my eye that the revenue growth rate is accelerating every quarter over the last year. The trend for EBITDA went from negative 18.7 million to negative 16.2 to negative 14.5 to negative 15.1 and then to negative 7 in the latest quarter. And this isn't that promising a EBITDA trend because they were losing about 15 million for the past number of quarters. But in the latest quarter, they're only losing 7 million of EBITDA, which is a step up. So that does have me interested. On net income, we see a bit of a choppy pattern. It goes from negative 11.3 to positive 3.5 to negative 30.4 to negative 15.7 and to negative 1.7 million on the latest quarter. I'm guessing that result from 3 quarters ago, where they had negative 30.4 of net income, is a one time issue. But if we're going to decide to invest, it would be worthwhile to look up what happened that quarter and why net income was so negative. I do like that net income is almost break even after having bigger losses on previous quarters. For gross margin, we see a really nice pattern where it goes from 55% to 57 to 58 to 58 again, and then to 60% on the latest quarter. And so all those metrics above are physically written on the back of the transcript. The most positive aspects of these financials, which stand out, are the revenue year over year growth rate, which shows a perfect acceleration, growing every quarter. Gross margin is growing as well. And there's also a step up in profitability in the latest quarter with EBITDA and net income. Step 3 of our process is to note basic company details. And we write the following on the back of the first page of the transcript. First up are balance sheet items of cash and debt. That's followed by market cap. And we want to take cash and debt balances in the context of market cap. For example, $100 million of debt is a lot for a company with a market cap of 500 million, but it's not that significant for a company with a market cap of 5 billion. We next use AI tools to query some basic questions. The 4 questions I like to ask at the start are: when is the company founded? When was their IPO? Where's their headquarters location? And how many employees do they have? All 4 of those questions can be wrapped up into one query, and most AIs should be able to answer that question pretty easily. The AI tool I like best is Perplexity, and it does have an option to search SEC documents, which is really good. It's a good idea to try different AI models, and one thing I noticed is DeepSeek does not censor US corporate information the same way ChatGPT does. So sometimes if you ask ChatGPT a deep financial question, it may tell you to go to the investor relations page of that company. However, DeepSeek is much more likely just to search that information and give you that information straight up. For Evolv Technologies, we end up noting the resulting text that goes on the back of the transcript. And we have cash of 35 million, debt of 14.4 million, and a market cap of 1 billion. We discovered the company is founded in 2013 and they did a SPAC public offering in 2021 to go public. The headquarters for this company is in Massachusetts and they have 287 employees. These basic company details serve as a smoke test to see if something might be obviously wrong with this company. So sometimes we might find out a company has a whole lot of debt, or the headquarters is in Shanghai or somewhere unusual. We might find out a company has a ton of employees and they have a lot of overhead paying salaries, or they might just have a really strange founding. And for Evolv Technologies, nothing stands out too strong there. The SPAC may be a bit of a yellow flag, but it's not too bad as many companies did a SPAC around that time frame. However, the traditional IPO process is a little more rigorous, and we typically prefer to see an IPO over a SPAC when possible. Step 4 in our process is to gather more product details about the company. And we add those product details to the back of the first page of the transcript, now towards the bottom of the transcript. This is another place where AI tools such as Perplexity come in use. We can ask an example question like, tell me about the product for Evolv Technologies. After we get an answer, we can ask a follow up question, such as break down revenue by product category. And we can keep asking follow up questions based off the responses we're getting until we're fully satisfied with the answers. And in the case of Evolv, we ended up adding the following details to the back of the transcript. Our first bullet point is that Evolv is a security screening solution that detects weapons in schools, casinos, workplaces, and venues. There are two main products, Evolv Express and Evolv Expedite, and they detect firearms, explosives, and knives. There's also Evolv Insights, which is comprised of software and web and mobile access to control systems, dashboards, analytics, and automated reports. The system overall helps with visitor flow at big events, and it monitors system performance and has alarm stats. It works with connected IoT, and it's a subscription model, which is software plus support. Express and Expedite combined had 4,500 systems installed at the end of 2023, and they had 6,100 systems installed at the end of 2024. For this video, I wanted to show how the actual back of the transcript looks. On the top half of the transcript, on the first page, I'm noting all those key financial metrics. And you might be wondering, isn't that just copying the data from the data provider? And while that's true, it serves as a forcing function for me to really review these financials in depth and take a serious look at them. It's a lot easier to casually glance at the financials when you're just looking in the data provider. Right in the middle of the transcript on the back of the first page, we have those basic company details like cash, debt, market cap, headquarters location, and number of employees. And that's just to make sure that nothing seems really off with this company. Then on the bottom part of the transcript, we have the product details as we just discussed. Writing down all the information on the transcript keeps it concise and in one place. Later on, if I want to review why I bought into this company or why I passed on it, I'll have all the information in one place to be able to review my decision at that point in time. Step 5 of our process is to ask more in depth product questions. And we'll add any interesting findings to the second page of the back of the transcript. Here's a few examples for Evolv. I asked, tell me more about Evolv's subscription model. Additionally, one of the answers I had gotten to a query earlier mentioned a FTC lawsuit against Evolv. My follow up question there was, what was the FTC lawsuit against them about? I also asked, break down revenue by geography to see if they're US based or they're expanding internationally. And lastly, I was asking about competitors. Who are their biggest competitors? So we'll gather all those details and add them to the second page at the back of the transcript. The first standout item for this business was really positive. It was that subscription revenue grew 101% in the first 9 months of 2024 versus 1 year ago. However, we did discover something quite negative about Evolv, which is the FTC claims against them. They say that Evolv made misleading marketing claims. They overstated how much AI they have. They acted as a simple metal detector. They omitted negative findings about their product. And there were real world incidents of weapons getting through their systems. And I would consider this a dark yellow flag or possibly a red flag for this business. This isn't just a short report where someone says it's a faulty product. It's actually the FTC saying that they overstated their AI and their product has some major deficiencies. However, I don't want to short circuit my research yet, and I want to continue learning more about the company. We'll see if there's enough other positive findings to potentially outweigh this large concern I have. Step 6 in our process is to create a pros and cons section on the second page of the back of the transcript. We'll also have a section for conclusions. So there's three sections: pros, cons, and conclusions. When we're reading through the transcript, we can add details to the pros and cons section that we think may influence our decision whether to invest or pass. So we're building out our pros and cons section as we go. Sometimes, though, I'll just underline as I'm reading the transcript and then build the pros and cons after I'm done reading through the transcript. Either approach is fine there. As we're reading the transcript, we want to note any jaw dropping positive metrics, especially quarter over quarter numbers. So sometimes a company will say something like, our SaaS business is growing 30% quarter over quarter. And that'll often indicate there's a huge acceleration in the business. It's finding these accelerations that can give us an edge in the market, especially when we find an acceleration in metrics that the market doesn't recognize just yet. We want to see management have a lot of enthusiasm about the business or the underlying financial health. In the case of Evolv, they said there's improved operating leverage, which is a positive sign. We want to keep our eyes open for yellow and red flags about the business. It's really important to understand the bear case and what could go wrong for a company we may want to invest in. Here's how the second page of the back of the transcript looks after completing step 6 of our process. We have a few standout additional product details. The first being that subscription revenue grew 101% year over year. The second key takeaway was that the FTC lawsuit sounds pretty serious with a lot of allegations. I've then got my three blank sections for pros, cons, and conclusions, which we'll be filling out soon. Step 7 of our process is to read and underline the earnings transcript. As we're reading through the transcript, we underline key points with a blue pen. And we can take notes in the margin on anything which really stands out to us, whether that's positive or negative about the company. Something to note is that the first page of the transcript can usually be skipped, where it's disclosures such as the Safe Harbor Act. And we can start reading with the CEO's prepared remarks. This is then typically followed by the CFO's prepared remarks. And the second half of the transcript is a question and answer session with investment analysts. I'll use the question mark symbol to denote any yellow or red flags, and I'll put a star next to something which seems surprisingly positive or is a really positive comment from management. Some examples of the items I'm underlining in the transcript include management said they're implementing weapons screening in places it was not practical before. The company uses AI based weapons detection. There's 6,600 systems currently installed, and the company has a recurring revenue base of 100 million. I put a star next to that recurring revenue base as recurring revenue is really good, and the base of 100 million seems pretty decent for a company with a $1 billion market cap. The company said they expect additional revenue from new customer acquisition and expanded deployments. I added one more star for this direct quote where management said there may be more leverage in the business than we previously communicated. That's always a great sign when the results are coming in ahead of management's own expectations. Let's now look at some more examples of items we're underlining in the earnings transcript. Since the last investor call, the company has appointed a new CEO, CFO, Chief Accounting Officer, General Counsel, Chief Revenue Officer, and VP of Supply Chain. I actually can't recall a company replacing this much of the C suite before. It seems like a complete turnover of the C suite. I put a double question mark in the margin when I was underlining because this seems like a red flag to me. And this is definitely one of the items we'll be adding to the con section on the back of the transcript. The company did mention they resolved the FTC inquiry in 2023. However, I was getting a bit of contradictory information as the company said with the SEC, they're still updating some filing requirements. So I'm not sure if that's two separate issues, but it left me a bit confused, which isn't a good sign. They did mention they're enhancing financial oversight and cross functional coordination. And again, this makes me wonder, did they replace the whole C suite because they weren't doing accounting properly and they had product related issues? Getting into some numbers, revenue was 32 million, which was up 10% sequentially and 44% year over year. Those are pretty decent numbers for a growth company, and it definitely has me interested with those numbers. The company welcomed over 50 new customers in Q1 of 2025 and now serves 950 customers total. ARR, or annual recurring revenue, grew 34% year over year to 106 million. There was one sentence in the transcript that caused me to put another question mark in the margin. It was when management was talking about their sales team, and they said, despite challenging conditions, our sales team, and then they went on to detail some things about their sales team. However, they didn't say what the challenging conditions were, and I'm not clear what conditions they're seeing that would be challenging, as it sounds like revenue is growing pretty well. They did mention that sales and marketing spend as a percentage of revenue is improving. There's a 92% net retention ratio, and the company does offer certified pre owned systems for old hardware from non renewals. So it sounds like they can recover the old hardware and refurbish it and sell it to other customers at a discount if needed. One standout item was that the San Francisco Giants have a 4-year subscription with Evolv. 50% of units and ARR booked in Q1 came from existing customers. Evolv Express is in 20 out of 100 of the largest school districts in the US. Additionally, Evolv is making significant strides in transforming hospital safety. Let's now take a look at more example underlines to get a complete sense of what type of items we want to underline in the transcript. The company has an installed base of 500 hospitals across the US. And they've supported some high profile events: NBA tip off games, MLS Cup final, the Jake Paul versus Mike Tyson boxing, and 12 college football bowl games. They say they're in the early innings of a new market. For 2025, they expect revenue growth of 20 to 25%, which is on the lower side for growth companies. In 2024, revenue grew 31% year over year, and adjusted EBITDA was negative 21 million, but that's versus negative 52 million a year ago. So while they're not profitable, the situation is improving on profitability. 80% of their revenue is recurring, and they have remaining performance obligations of 261 million. On their balance sheet, they have 35 million in cash. The company is taking actions to reduce spend, and one direct quote was, "They're seeing improving operating leverage in our business model." There's been a recent shift towards more pure subscriptions, and that's versus prior purchase deals, which were non-recurring. The company plans to spend between 20 to 25 million of capex to support their full subscription business. They said they have the privilege of walking into 2025 with 78% of our outlook already contracted. And another direct quote was, "We are excited about the momentum that we see across our verticals." Their products are assembled in the US, and there's no tariff impact. There's also a Gen 1 to Gen 2 upgrade cycle for this company, and that could present additional upside as existing customers upgrade. Step 8 of our process is to complete the pros, cons, and conclusions section on the second page of the back of the transcript. The conclusion section will be used to summarize our findings or key takeaways. We will ultimately look to come to a decision, whether that's a hard pass on the stock, a pass, adding to a watch list, starting a starter position, or starting a full position in the company. And for Evolv, I had pros that it's a subscription model. There's a 4-year contract with the San Francisco Giants, that schools seem like reliable customers for them. They have improved operating leverage, and there's a Gen 1 to Gen 2 upsell cycle. In the con section, I had there's a whole new management. Year over year comps seem easy. There was FTC issues with their product. The valuation isn't too cheap, and they have 20 to 25% projected revenue growth for 2025. My conclusions were, there was just too many questions I had around the FTC and SEC violations or issues there. The all new management is a big wild card. Sometimes a new management can reinvigorate an old company, but we don't know if that's the case yet. So I'd like to see a few more quarters to see how the performance holds up here. The business does sound promising overall, but I have too many questions. Step 9 is our last step in the process where we make a decision on the company. We want to decide which category the company falls into. Are they a hard pass, a pass, a watch list company, a starter position company, or will we start a medium confidence or higher position in this stock? A company which is a hard pass has multiple dark yellow or red flags, and we would never invest in this company in the near term. A company which is a pass has some yellow flags or drawback, and it's an interesting company, but we're not ready to invest right now, and the cons may outweigh the pros. A watch list company is when we're really on the fence. We can see both pros and cons, and the solution here is to do more research until we can reach a decision about the company. If we decide on a starter position, it's because the numbers and narrative check out, We are enthusiastic and we enter the stock while we learn more about the business. A medium confidence or high confidence position can be started when we're thrilled about the numbers and the narrative, and we're already familiar with the business. Sometimes this can happen with a company like Reddit, where I know a lot about the product, and the numbers really checked out for them when I started a position. So I was able to start with a medium confidence position on Reddit. And I've estimated some outcomes from my process, and these are just kind of rough guesses. I think about 40% of the time it's a hard pass on companies. I pass about 45% of the time. 8% of the time it's a watch list company. 5% of the time it's a starter position. And 2% of the time it's a medium confidence or higher position. I was actually thinking to start tracking this number and get some hard data about how often I'm passing on companies or investing in companies based on this process. And that might lead me to make additional improvements in the process. When you're making your final decision, you can pretend like you're a VC investor or a Shark Tank host. You need to make a final decision whether you're going to write a check to this company, or in our case, invest in this company or not. The nice thing about public stock market investing is if we change our mind, we can always sell a stock. However, if we are a VC investor, we wouldn't be able to get out as easily, even if we learned something negative about the company after we invested. When we're starting a position, we want to feel like this is the next big idea, and we can't wait to get money in. We're really enthusiastic about this business. My final conclusion for Evolv is that it fell into the past category. There's a totally new management, and there's allegations of product fraud from a legitimate source of the FTC. However, it is an interesting enough stock that I want to see how future quarters land for this company, and I don't want to rule it out completely. I decided to pick a company I passed on for this video, as that's the most common outcome for this process of reviewing a earnings transcript for the first time. I didn't go with a company I bought into because that's a more rare case, and I wanted to give the most typical case possible here. I wanted to share one final picture here of the completed second page of the back of the transcript. At the top, as we saw before, we have a few standout items on the product regarding subscription revenue and the FTC issues. Then we have our pros and cons section, listing out different pros and cons for this business. We have our conclusion section, and then our final decision, which was a pass on Evolv Technologies. Let's now do a quick rundown of our 9-step process for evaluating a new stock. We first print the transcript, and then we note key financials on the back of the transcript. We then add in basic company details and gather some basic product details. We follow up with additional product questions, and then we create a pros and cons section. Step 7 is to read and underline the transcript, and then we fill out or complete the pros, cons, and conclusion section. Finally, we make a decision about this company and stock. Are we investing or not? Let's now summarize some of our key findings on evaluating a new stock. We need a consistent and efficient process for reviewing new companies. Printing earnings transcripts works as a forcing function to review them closely. We note key financials, balance sheet items, and product info on the back of the transcript. We also document pros and cons, which could influence our investing decision. We then make conclusions based on a full look at the numbers and narrative. We follow through on a final decision, documenting our trade if we decide to invest. All the details of our decision, rationale, and logic are on the transcript. And we want to keep the transcripts around in case we forget our decision. Keeping the transcript around will serve as a good starting point if we want to re-review the company later. This concludes our video on evaluating a new stock. If you enjoyed the video, leave a like or comment below and subscribe for future updates. As a final reminder, this is not investment advice or recommendations to buy stocks.